Thank you for coming out. The title of my talk is Geopolitics, Energy Transition, and the AI Dream. It is a variation of the talk I gave in Vancouver about a month and a half ago, but there's a new twist to it, which was an epiphany that's only about a week old for me as to what it will take to actually have the resource juniors get a life again. So to be frank, last year it became apparent that the Canadian resource junior ecosystem passed through the extinction threshold and is now on a path towards decaying and dying and probably gone by the end of this decade unless there is a change in the way the governments, the regulators, the financial markets perceive the role of the resource juniors. So right now the financial establishment is indifferent except to use it as a tool to harvest incoming risk capital. Company puts out a press release, somebody starts buying it, the traders at the brokerage firms start selling into it. When the buying starts to fizzle, they keep selling on the downtick. They only have to intend to borrow. The longs despair, those who bought have buyer's regret. By the end of the day, the little uptick has been snuffed out and the broker traders cover their shorts and never have to borrow the stock. And this is now systemic. It's like a big squid sucking away the lifeblood out of these juniors. And the brokerage firms aren't really financing at the smaller end. The regulators did introduce the life exemption, but they made the paperwork so difficult that only brokerage firms are going to do it. So it's not really available to the companies doing it independently with ordinary individuals. And it's also amazing the antipathy that, for example, the Canadian government has towards the mining and exploration sector. It's incredible that Canada spends all this money on battery factories, but seems to go out of its way to inhibit companies getting permits and getting stuff done, getting the physical material out of the ground. And it's insane because the United States, unless Canada has something to offer, they're not going to buy the batteries from Canada. They're going to buy them from themselves. So that has to change. And I don't know if that means a new prime minister and a total, house cleaning of the government. But the fourth thing that's the worst is that the audience, the speculators that used to be interested in the resource juniors, they have vanished and are vanishing. It's only boomers like most of us in here who are, still care about this sector. But all the younger generations, they're into momentum gambling, trading Bitcoin, ETFs, whatever, where they don't need to think about what the fundamentals are or what the outcome is. All they need to do is bet on the right trend. And making the BTC, the Bitcoin ETFs available, now you don't have this headache of losing your wallet or anything like that, so everybody can gamble in that arena. And you can see this in this chart, which is a monthly stacking of the financing done by TSX venture listings. They are the red is the resource juniors, and the blue is also the value traded during that month. And what's really kind of shocking is this was sort of that post-crash peak that we had. This is now almost 14 years later, and the value in relative terms, it's actually diminishing. We've been in a bear market for more than a decade, and it is dying. We had this little bump of a financing here when in the second half of 2020 when COVID struck and there was all this money printing going on, but all that seems to have vanished. Now, everybody's been puzzled about gold. Now, gold made a new high on Friday, and maybe 2000 is going to be the floor rather than this eternal ceiling that always tries to break through but eventually crashes back below. But even $2,000 plus gold doesn't really move the needle. If you take $400 gold from 1980 and inflation adjust it to the present, it should be $1,554, which implies a 32% real gain. But that's not very much, and that's not real because the hard costs, the CapEx and OpEx that goes into mining, that has inflated more than the general CPI. So we're at a wash in terms of having the kind of windfall we had in the 80s when gold went from $35 to $400 and then stabilized. And that produced 3.4 billion new ounces since 1980. We've more than doubled the existing above ground gold stock. And you can see how the production has now retreated a bit from the peak and is basically going sideways. And the problem with gold is this is a chart of the accumulative above ground gold stock. So we have about 6.5 billion ounces sitting out there, which are worth about 12, 13 trillion. And Bitcoin wants to end up being worth the equivalent of that. And all this gold is an overhang on the market. It's not really doing much useful. So it is kind of like an asset class that's very unusual. It's different from Bitcoin because Bitcoin is an energy liability and refers only to itself in US dollars and serves no purpose other than to facilitate crime laundering crime proceeds, and ultimately to transfer the wealth of the boomer generation to the younger generations as they get sucked in by Wall Street to buy this Bitcoin stuff. And a perverse thing that sort of always struck me about gold bugs is they're always whining about how gold needs to go higher. Well, how can gold keep going higher when it's being produced all the time, adding almost 100 million ounces each year? What if the anti-mining lobby instituted a ban on gold mining globally? How many here are gold bugs that would be delighted by that? I guess there are no gold bugs here. You guys are here to find gold deposits and that are profitable and to see them developed. But you don't have to worry about this happening because China and Russia are amongst the top producers in the world, and they're never going to agree to a ban on gold. In fact, gold is their key to gradually displacing the US dollar from its sole reserve currency. So we're in a transition phase here where the gold demand will go up because it's physical, it's stored energy. You can't pull the plug on it like you can on all those Bitcoin mining machines. And maybe the geopolitical uncertainty that we're seeing, it's finally starting to sink into people that gold is going to go higher because it's not so easy to make more of it right now. And it is going to be an asset class that you'll have possession of regardless what happens with all the other monetary instruments. So my theme for the past 2 years has been these two themes of the emerging conflict between global West and global East, with the global South trying to sort of figure out who's going to butter their bread best. And the other theme has been the climate change problem and all the needs of the things that have to be done to keep the temperature from rising more than 1.5 degrees Celsius by 2050. And the energy transition requires substantial amounts of more metal if all the technologies that they have in mind are going to become reality. So the International Energy Agency produced these numbers a year ago, early January last year. And we need 600% more lithium, and that's not enough because the lithium-ion cars that we have now, they're not going to scale to mass adoption. They don't have the sufficient range, they don't have short enough charging time, and they're not cheap enough. But if you get a solid-state lithium-ion battery, a lot of those problems end up being solved, and there's groups like Toyota who are now claiming they've made that breakthrough, but it ain't really going to happen until 2030. But 600% more of that, 50% more copper, 100% more nickel, and 100% more rare earths. Now, copper, it's fairly diversified where it comes from, but the copper price has been relatively flat. Nickel has tanked because China is doing its best to weaponize raw material supply. Although Indonesia is now provides 50% of the world's supply, all of that was bankrolled by China after the government, Widodo, decided to impose a moratorium on shipping raw ore over to China. And of course, Indonesia's got this relationship with China that if things blow up with the West, that nickel supply is probably not going to come here. And it's also not very good for the EV golds because it's all fueled by dirty coal, cheap, dirty coal. So, you know, you're going to want your lithium-ion battery that still needs nickel like Toyota's does, come from like polluting carbon dioxide spewing sources? Probably not. Now, lithium, you see that fantastic chart. You see the first bump to $11, $15 in sort of 2015, 17, then it crashes, and then it takes off again, and then it's crashed again in the past year. Lithium to actually provide 600% to 1,200% more by 2030 needs to be $10 a pound. But another problem this industry has and the audience has is they look at the metal price today. But when you do the numbers, the projections for what's going to be needed down the road, and you look at where could this possibly come from, you know that it's going to require a higher price because we've actually mined an awful lot of the low-hanging fruit that's already out there. So the people are starting to understand that with lithium. The stocks finally stopped declining in the past week and are starting to rebound. But this mental change of going away from, well, what's the metal price today? Now, with gold, we don't know what it needs to be. It doesn't matter what it is. So that's always going to be an arbitrary speculation as to where it should be and where it will be. But things like lithium, you can see that it's going to have to be at $10 a pound, and it's going to have to be a deposit that's 1% or better, and it's got to be in a location that's easy to develop. So this is a boom that's sitting there waiting for the juniors. It got sabotaged last year by the forest fires, which shut down all the boots on the ground activity in the James Bay region. Hopefully this gets going again today. But we're going to need a lot more lithium if you believe that EVs are going to displace ICE cars. And rare earths, the rare earth prices are now as cheap as they were before the big run-up in 2009 when China imposed its export controls. And since 2009, it's gone from about 120,000 tons annual production to 350,000 tons production, all to accommodate these EVs, these super magnets. It's mainly the magnet rare earths that matter. And China still dominates 2/3 of global supply. Again, it's weaponized. They can produce this stuff cheap. The problem with these global East countries like China, they think in big picture strategic terms. They don't think in terms of how much profit is there for the shareholders of this corporation. So they will subsidize raw material supply that they see as strategic for their interests and collect their gains through other ways. And the Western companies can't really compete. And yet we're becoming ever more dependent on a country whose GDP is going to approach ours by 2030, at least the American one by 2030, and going to be a significant threat in terms of how the world operates. Now, here's my vision of how I think the whole EV cycle will unfold. Most of the analysts show a kind of a straight line, linear adoption. We had this nice burst after 2020 where a lot of EV cars sold. China has actually done extremely well. They've replaced almost half of their ICE fleet. They're doing it for a reason, a strategic reason, because they need to import oil, and that goes through choke points. So that's their Achilles heel. And they're not doing it for climate change reason because much of their electricity is generated by coal power. So this is a strategic reason they are doing this. Now, their EVs that they want to export everywhere, they're not really what people in Canada and the United States want. We have longer distances to drive. But the next wave of EVs, they'll start coming on stream in 2030. And that's when mass adoption becomes possible. But that's why the moment now for like the Canadian government to wake up and say, we are going to be a stable supplier of lithium from pegmatite deposits, and maybe direct lithium extraction from brines will become a reality down the road. Who knows? But they need to come up, stand up and say, we want this. And yes, you're building your battery factories here in Canada because that gives you direct access to the lithium that we're going to produce. But we don't see that. We see a bunch of blah, blah, blah about energy transition, but we don't see serious steps being taken to really make that a reality. And again, this graphic's just quick to show you. The blue line is it's a percentage of total GDP that the United States has relative to the purple line. And although there are some serious problems in China right now, which could completely upset this idea that eventually their share of global GDP will converge, the general trend is still that this is underway, and the United States economy will become less important on a relative basis in the global economy. So here's kind of a crude map of how I split up the world into Global West. Global West are countries that still have democracies where you elect people, you have rule of law. The purple Global East, well, that's Russia, China, Iran, North Korea, Saudi Arabia, countries that are basically autocracies, and that's an old model that we really don't want to go through. And this invasion of Ukraine by Russia, the fact that it's being tolerated is by so many people is just unbelievable. But the Global South is the problem for the Global West, whose economy is like 70% of the total, and the Global South is just emerging. But a lot of raw materials are in those places, and they are looking more towards the Global East because they themselves, as developing countries, aren't so excited about democracy, so they're perfectly happy to work with autocracies and preserve their own internal political agenda. And so here is a graphical demonstration of the problem that the Global West, the biggest chunk of the global economy, faces. The blue is their share of all those different raw materials I got marching along the bottom. The red is what comes from the Global East, which is mainly China and Russia, and the green is what comes from Global South. So the raw materials dominantly come from the smallest portion of the global economy. And if we end up in a geopolitical conflict between Global West and East, that supply is going to evaporate. And nobody understands that. Very few people, young people especially, have no idea where stuff comes from or how it's made. This year, I'm hoping there's going to be an awakening for everybody to understand that we need to develop domestic supplies, explore, develop. Don't bend the permitting rules. Do it properly, but do it quickly. Instead of turning these things into a type of tax, a special tax, extending it so that people who are really doing nothing but pretending to be evaluating stuff get paid forever and ever and ever. That has to change. And here, this is a graphical depiction of the share of the Global West economy. Right now, it's about 59%. The Global East is 21%, and the Global South is about almost 20% also. And this was a graphic that I introduced in Vancouver. I'm not going to talk about it like I did back then, but I've been sort of struggling with this polarization that's been going on. And somebody I've known for 30 years, she's been in investor relations, was telling me the other day how either at a booth or on the phone dealing with people, there's something strange that's happened in the last 5 or 6 years, which is that the first interaction is a probing to find out, are you a Trumper? Are you an anti-Trumper? Are you whatever? And she's saying, well, I'm here to tell you about this resource projects that we have and what we think is going to happen and all that. Democracy right now is under assault. And I used to think it was the spectrum of left to right with a center around which people like myself hover. But somebody mentioned that it's really more like a horseshoe. And the horseshoe bends in like that. And this is the threshold between knowing that all truths are tentative, except logical ones, and all ethical truths are prescriptive, and they're universally binding to qualify as ethical truths. And unfortunately, because we have multiple sets of values in a world of scarcity, natural scarcity, we end up with contradictions, so that even values that we have, we make a decision in this direction, it creates losers in that direction. And the whole point of democracy and pragmatism is that the people acknowledge this and negotiate and use the political process to figure things out. But now we see this, everybody sliding down into this. And the danger exists that we will see the world blow up into a crazy type of series of autocracies. And the upcoming election could make America MAGA land, where they're all on their own, which then sets all those other wannabe autocracies in Europe and Hungary and that all starts to fall apart. And the global West disintegrates and it becomes everybody against everybody. And guess who's going to win that game? It's going to be China and Russia. So there's an awful lot at stake with this polarization that's happening. And we think Trump's going to be the bad guy who does all this stuff. Well, there's an alternative solution, an alternative outcome. Now, if America goes it alone, the blue is what it supplies of all raw materials. And if America is nobody's friend anymore, not only does that make people want to stop using the US dollar and the price of gold goes up substantially, but nobody's going to want to supply anything to them. So this is the vulnerability that America has to wake up to and start looking for developing deposits in jurisdictions that are secure, where rule of law still operates. And for this to happen, the United States kind of needs to stay a democracy. Now, I've been troubled by the whole AI bubble story. I don't like the idea that the white-collar worker population that blossomed after the digital internet, the PC and internet revolution, they all went from being sort of clerical workers to becoming knowledge workers. But AI threatens to displace all these people, and this doesn't even get into the question of what is AI going to do when it starts being in control of itself, where it wanders to. But that's the pessimistic doom and gloom outlook. The other alternative is that AI will end up harnessing itself to strafe the universe of elements and put together countless inorganic and organic molecules and do statistical analysis and say, here's a set that potentially do this and that are stable, give it to the workers to prototype. So these ex-knowledge workers who aren't pushing ideas around anymore will be part of this prototyping and seeing if these new materials do what they supposedly can according to the computer simulation. And this has the potential to deliver extraordinary benefits for both the sort of biomedical field, also agriculture, and also for energy efficiency gains. Because the way you make the world more prosperous is you come up with an energy windfall, whether it's initially coal, then it's oil, and now we're looking at wind and solar, but that's not really a big gain. Fusion potentially could be a huge game changer, but that's 15 years or more down the road still. But all these smaller things together could make a lot of benefits. Now, this brings me to the sort of problem of why has this energy transition and its goals and requirements not taken off with the markets, the financial sector? Well, one reason is that a boomer like myself is not likely to live long enough to find out whether the sacrifices we need to do now will actually have had a purpose, made any difference. So the inclination is to just say, well, we're the me generation after all. Let our children and grandchildren figure it out down the road. But so this is why there's this sort of resistance towards the energy transition. But something with this AI boom, there's benefits that could flow to me very, very quickly and to a lot of people. But there's a problem. This AI computation has astronomical power requirements, way more than the grid can deliver and that the power generators can generate. So as the AI starts taking off, you're going to suddenly see the boomers, the ones who don't care about the energy transition, say, we need to do fiscal spending to upgrade the infrastructure, modernize. And this is where Trump could end up not being the horrible president if he ends up being president. He could tell the culture crowd, the absolutists at the bottom of the belief horseshoe, to go fly a kite, and he says, we're going to remake America. and we're going to take advantage of this AI, and it's going to deliver gains for everybody across the board. And then somebody will say, and while we're at it, why don't we do it with the clean energy spin, just in case it does make a difference in 2050 that we reduce our carbon footprint. So, NVIDIA's got a $2 trillion market cap. This juggernaut is not going to stop, but there's going to be this awakening, say we need to upgrade this energy infrastructure, and it's going to require these metals, and it's going to take 5 to 8 years to get them coming out of the ground. So the moment is now to go to work. And this is, are they going to call up Rio Tinto and say, yeah, when can you expand your copper production? Well, with what? Where? What deposit? This is where the juniors come back in, where discovery exploration, doing clever work, using new technology to rethink the geology and all that. There's a chance that this dying ecosystem that I described at the beginning of this talk could actually turn around, and that we're on the cusp of the resource juniors going from zeros to back to the sort of heroes they were during the China supercycle. And until this happens, I'm focused on discovery exploration. Deal with the metal prices that we have. Don't sit there and say, well, you're going to need a $10, $12 lithium 6 years from now, so let's pretend that's the price right now, even though it's $6. No, take the metal prices that we have, look for stuff that works. And the two companies that I have here are extremely interesting in that regard. They're both, and this is unusual for me, they're both into zinc, lead, silver deposits or targets. And you look at those charts, zinc, lead, and silver, and they would say zinc is in the sink and lead is dead, and well, silver is just as bad except for that one spike in 2010. But look where the zinc comes from. It comes from China. And the lead also comes predominantly from China. And a good chunk of the silver after Mexico comes from China. Now, here's a problem for the zinc market down the road, and that is, what does lead go into? It goes into ICE car batteries. And it's all there, gets recycled. It's there waiting to come back into the market. And when the EV transition starts to happen, there's going to be a flood of lead looking for a use. You're going to see, like it was with the rare earths, with europium, which used to be the critical phosphor for color TVs. It used to be a couple $1,000 a kilo. Now it's like $20 because the usage has been eclipsed by new technology. This is going to be a problem for zinc-lead operations, which count on the lead byproduct at sort of 80, 90 cents per pound. If it collapses to 10 cents a pound, these zinc-lead operations, a lot of them are going to shut down, perhaps even China, which is a dominant supplier of zinc-lead. And that's where these zinc-lead-silver combinations are important. And silver is in the category of like solar panel applications and things potentially using a lot more of it. And there's also the linkage to gold as a hard asset type of thing. So projects that have a high silver component but also a high zinc component have the potential to become sexy rather than boring. Forget the lead. In fact, count on the lead making the deposit successful. And that's where grade ends up being the big deal. And PJX Resources, after a century of failed Sullivan II hunts, has, through what's kind of a nature act of serendipity, come across something that could be another Sullivan, has the scale to be as big as Sullivan, which was a 150 million ton world-class deposit. And they'll hopefully be drilling this in June if they get the permit. And it was not discovered, even though there was a little mine with 100,000 tons of production from a vein nearby, because there was a dike sheet, much younger, that came up and shielded the whole mountainside. And John Keating will be explaining what that's all about. And right now it's priced at about a $44 million implied project value. And Silver North isn't quite shooting for a 150 million ton SEDEX deposit. They're looking for the western part of the Keno Hill district, which Alexco struggled And John will probably explain too why it struggled, or Jason will explain why it struggled to make it work. But Hecla solved the problem, is putting Keno Hill back into production, getting it to capacity, and Haldane Mountain to the west, which Silver North owns, all of a sudden its vein sets, which are higher up than the other ones in Keno Hill, suddenly they have reason to go in there and start drilling this off and see if they can hit a 30 to 60 million ounce thing that Hecla will then need for its mill. So these two stories are both discovery exploration stories with drill programs happening this summer, and the market's treating them with not very much respect at all. And thank you for sitting in on this. You should know that right now the newsletter costs $4.50 a year. It expires at the end of this year. Next year it'll be $200 a month for anybody who wants to come in. And if we're in a roaring bull market, well, I'm sure lots of people will. But those that are active members at the end of this year will be entitled to renew at the old grandfathered $4.50 rate. Thank you.